Hello everybody, this is Team L and we are showing you a presentation of Alrosa company. By the way, we do not hold a financial interests in the securities of this company and we don't know of the existence of any conflict of interests that might bias the content of publication of this report. Alrosa produces 95% of all diamonds in Russia. The company's share in world diamond production is 27%. The company has proven reserve enough to maintain the current level of production for at least 20 years. Alrosa's forecast reserves account for about 1/3 of global diamond reserves. Production of unique diamonds of especially large sizes and fancy colors. As you see, Alrosa allocates in Respublika Sakha, Yakutia 90% and Arkhangelsk region. Also, there are some regions in Angola. According to the independent expert report prepared by Micon International Company Limited, on behalf of Alrosa, assessment of deposit operated by 4 key divisions of the company were prepared. According to the agreement with Alrosa, the assessment of mineral resources and diamonds reserves in the report Katoka joint venture in Angola owned Alrosa was not included in the report and was not rated by Micon. The table shows the total resources of Kimberlite and Placer deposits of the Alrosa group of companies. The volume of sand in cubic meters were converted to weight using a volumetric weight of dry material. If Alrosa will keep excavating rate the same at least 15 years, average rate 30 million carats per year, the projected reserves in existing deposits will be enough to continue production for 20-25 years. In accordance with the Micon report, the total amount of raw diamonds will be enough for average production period of 30-35 years. Micon highlights growth prospect of raw diamonds exploration in some of deposits included in Alrosa report. This increment can be supported by further exploration of fields rich with diamonds. Currently, these zones are not sufficiently explored to be classified as resources of reserve in accordance with the recommendations of the JERC. The diamond business is concentrated in the hands of a small numbers of companies. 5 giants, De Beers, Alrosa, Rio Tinto, Petra Diamonds occupy about 70% of the market, and product prices are largely depend on them. The most effective company is Alrosa, depicting positive dynamics in almost all years. As you see on the picture, Alrosa has the best EBITDA margin among all other companies, and from year to year it keeps the same rate of margin, and it lets her make a lot of mistakes, and it is really nice for this company. Despite the existing problems, according to the report conducted by the consulting company Bay & Co., the demand for diamonds will grow at an average rate of 2% per year until 2030, and production may dip in a negative scenario, or in a better case it will increase by approximately 1% per year. In an optimistic scenario, this growth will be supported by the following factors: the growth of the middle class of China and India, an increase the wealth of the millennials, regular growth of PDI and GDP. The relative price comparison shows that Alrosa declined gradually and have strong growth potential. Finally, declining risk is gradually lower than it was previously. Alrosa is stable and rapidly growing company with strong position among its competitors. The higher in the industry margin of EBITDA, revenue, net income among competitors allows us to estimate great competitive advantage comparing to competitors. The great advantage is that Alrosa is ahead of the peers in growth of return on invested capital and operation margins. It gives Alrosa possibilities to make mistakes, a lot of mistakes. For capital-intensive mining production, such profitability is very strong and healthy. It characterizes an effective operating cycle and good future for the company. From 2012 to 2018, sales revenue continuously, evenly and predictably increased from 150 billion rubles to 300 billion rubles, 100% in less than 7 years. The company maintains revenue growth rates of more than 14% per year. The growth of net profit is unstable and has a large unevenness over the same period of time. In 2013, it even goes into the negative region due to the redistribution of cash flow aimed at significant repayment of loans and borrowings. In other periods, the growth of net profit has a directed trend towards an increase and quite predictable. The total debt of the company as of June 30, 2019 is about 190 billion rubles, which is fully covered by the retained earnings of the company. 209 billion rubles, which indicates the excellent financial health and the ability to pay off the debt completely at any time. At the same time, the share of dollar debt from the total amount is about 80 billion rubles, which partially diversifies the company's currency risk. The share of borrowed capital is constantly decreasing, which certainly indicates the quality of management and health of the company. Dividend policy is based on free cash flow amount from 50 to 100% or below, and depends on EBITDA to debt ratio. In the first half of the year, the company received 28.3 billion rubles in FCF. If the company pays all of the FCF as dividend, it will result in 3.93 rubles per share, or 4.5% of dividend yield at a price of 80 rubles. Squeezing of the free cash flow and increasing capex percentage will cause to dividend cut in absolute amount, and more probable outcome is 50% or below, less than 2 rubles. It will gain the price dip in short term. We expect that within 10 years the natural rough diamond supply will grow slower than the demand during the same time frame. Finally, it will lead to average price growth with a rate more than real GDP to 3%, and Alrosa being of the best during 10-15 years time frame. Slowdown could be possible because of economics fluctuation and substitution from lab-grown diamonds, but long-term trend will be positive according to continuing China and India economic growth. According to a realistic DCF model scenario, the fair price for Alrosa shares within the range of 65-75 rubles. Our recommendation is to hold for Alrosa until target price will dip as low as 65-70 rubles. At that point, we will have enough margin of safety and reasonable level of price. We expect that with the recovery of bank credit terms and financial state in India and the relations with China, revenue will continue to grow, and we anticipate acceleration production growth in jewelry segments. Thank you for your attention. Bye bye.